Hey everybody, we are Startup Brothers and this is episode uno cinco, number big 15. We made it.
Getting
I'm
past
Trace.
9, I heard it's the hard part.
Yeah, I think something like what, like 99% don't make it to episode 9, so it's just consistency. So we're trying to do Sunday nights. We're trying to get this out, start off the work week, kind of recapping what's happened the prior week. I kind of feel like last week tonight with John Oliver. It's kind of fun though. Just like you figure out the week, how people handle it, and kind of just give a recap on the craziness.
And the best way to talk about these things is both obviously real perspectives, but some humor and be a little facetious about it, and almost make it like a meme, but 30 minutes long.
Yeah, that's the whole point. You got to talk it out because everything is always out of context.
Sure.
And no political, no media, but we read headlines, we see pictures, we
Yeah.
have our biases, and we don't get the full story because we probably don't read the entire story. Even if you did, it doesn't have all the information, and we don't have any background or expertise or information on the story to begin with.
Yeah.
And so we kind of just go ad hoc, and so that's where like my memes are fun. It's you read a headline, you see a picture or video, you laugh, you move on. And that's why I want to do what we are trying to do, at least with startups. Talk about big level pictures, explain it, make you laugh, move on, you'll learn something.
And it's funny because it's true equals funny, but it's sad, funny, true. But that's why we're here to break it down for you weekly.
Right. And so the first sad but true, not so much humorous just yet, but we'll get into it, is startup funding, which is always going to be the topic. That's what we are,
Yeah.
Startup Brothers. And we're still kind of on the low. We're on the down, even though stocks are at record highs. Big tech is getting bigger. As I say every
Yeah.
time, it is difficult to be a startup. It always has. A startup is always a struggle, but you're seeing these behemoths. They have a core business model. 99% of Google, Facebook, and even now Reddit, which is a public company, 99% of it is just ad revenue. You can't beat it. You have hundreds of millions, billions of viewers, and you just sell ads against it. It's not that easy because you still have to
Yeah.
build the ad market, and it took decades to actually build it out. But that is the simplest model opposed to that. You built a product, you manufacture it, you ship it, you warehouse it, you ship it again. If it works, great. You got to do that again. If it's not, they got to send it back. Definitely, you get to choose what's easier, harder, or sucks less.
And there's an unfair advantage with these companies. They were built at all growth at all cost when money was cheap and free. I remember when Facebook started, how do we even monetize this? I think when they IPO'd, it took them 24 months to even figure out, potentially make a profit. And that was cool back in the day,
Yeah.
right? How many users can we get and then figure out how to monetize it? Now these are U.S. Treasury behemoths just printing money. And my favorite part is, oh, they missed their profit by $1 billion. The stock drops. It makes me, mind boggled. But that is the unfair advantage that they have. That these profits they get to pump it into the next version of whatever the next version is, and they almost dictate it. Yes, this new AI boom seems like there's a lot of funding. It seems like things are
Oh yeah.
skyrocketing. But what about us? The companies that are not in AI, the companies that are not, I mean, let's just say peelaways.ai. If I could
Yeah. When
add
are your smart
AI
bed
into my
sheets coming
company,
out?
yeah, when are the robot
When do they peel themselves?
I don't know, one day. But dot AI now, every company that comes across our desk has some sort of AI play, whether it's true, real, or not.
Totally agree. And to your first point, yes, these companies print money. We watch the Facebook, Google, Amazon earnings, and it's like, oh, they only made 19
No.
billion in profit this quarter. It's supposed to be 19.5. That point 0.5 is 500 million
Yeah.
dollars. That's 99% of all startup funding revenue that all of them combined make in that one quarter they missed by. What do they have to innovate on? Everyone's like, oh, they're not being innovative. They have the most brilliant people working at these companies. We're just so jaded. And they are spending, great. Facebook spent and burnt $50 billion on the metaverse and their Quest. you know what? It's a great product and great. They changed the name to Meta. They tried. But the problem is they can't innovate, as you said, as easily because they're on the quarterly. So they can't burn money as fast. They wish they could spend more money and not have to worry quarter to hit expenses, hiring, servers, and try and compete. That's where the startups come into play. And right now it's all about AI. So yes, if you're not an AI company, you are a little bit out of luck. It was already difficult because funding is down. Smaller emerging managers like Fund 1 and 2 funding is down. It's all
Mhm.
going to the big VCs. They're raising billions of dollars right now because it's a flight to safety. And as I like to say, if you can't raise $50 million as an AI company, you are not an AI company. If you're not a PhD, if you didn't start Google DeepMind or work at AI somewhere, it's just a completely unfair advantage that these bigger tech companies have because they're investing in you and
Yeah.
the VCs.
And they're all fighting for talent, like full blown fighting for talent. In many cases, these people want to start their own companies, and they
Yep.
are. And the unfair advantage is so highly unfair these days. It's almost like why even try and compete? But that's the beauty of startups. That's the beauty of disruption. And this actually could be a good thing where if you end up chipping away enough at somebody, this is where we look at acquisitions or mergers, where there hopefully there could be you get swallowed up sooner rather than later, and just take any win that you could get your hand on, because
Yep.
a win is a win. And most people don't understand that venture firms are looking for 2, 3, 4x, and these are excellent numbers. I repeat, 2, 3, 4x are excellent numbers. We come from the angel world, including being a founder. I'm not in the
Yeah.
2x world either. I want 20x from my last valuation. I raised money at a certain number. And if I don't raise more than that, sell at more than that certain number, or raise at more than that certain determined number, that's a down round. Or as a founder, I don't know if most people understand. I have common stock and I sell preferred. So if there's anything left that comes the scraps
The
that come down to the
waterfall is what we
common
like to
stack,
call it. Right.
it come
You
down
get
to the
the
common stack.
last waterfall.
So if I don't sell my company or raise more than the last valuation, the last decade of my life, good learning experience.
And that's what I like to tell all founders when they begin. Like, this is going to be the best, worst, most horrible roller coaster experience you'll have. And that's not going to stop you. You are a dreamy eyed visionary, probably a little bit crazy in order to do this, because why would you? But I totally understand after talking to these founders and working and everything else that we've done over the last decade. But you kind of jumped ahead, and I want to discuss it in terms of acquisitions. We're in the business of exits, not investing. The investing is like the bug and the feature. So, Microsoft, they're investing tens of billions of dollars, right? They put 10 billion into OpenAI. They've
Yep.
put billions of others into other companies. And so just this week, there's a company called Inflection AI. They're all blah, blah, blah AI. They've raised $1.5 billion, 1.5 billion from Microsoft, Bill Gates, Reid Hoffman, so that's Microsoft and
Yeah.
LinkedIn, from NVIDIA, and a few major VCs. And so, what happens when a $1.5 billion company that raised that much money can't raise more and they have some internal issues, but there's no acquisition market? Because to acquire a company right now, as we explained in the last one,
Yeah.
you can't buy them. Like Adobe couldn't buy Figma for 20 billion. Amazon can't buy iRobot for 1.5 billion. What did Microsoft do? They stole everybody.
Yeah.
They literally hired away the co-founder of Google DeepMind, who started this company, and they raised their last round in like June 2023, not even a year ago. But it's not working out for whatever reasons. It will come out eventually. So what happened? They made him head of AI at Microsoft. And what happens when that happens? The entire team comes along. So they literally gutted this company and brought them all internal, probably paying them millions of dollars and tens, hundreds of millions of dollars in stock options. Of course, I would take
Yeah.
that. The company is pivoting and trying to work on something new. And why did they do this? Shoot first, ask questions later. If they tried to acquire this company, the SEC would be like, no. And so, as Jay-Z said, what's 50 grand to me, right? What's 1.5 billion to people who are worth hundreds of billions of dollars and three companies with market caps of trillions of dollars? It literally is less than 1% of their thought process.
Yeah.
It's crazy. So they just rated. They'll probably be sued and everything else, but they already have it, and they're gonna have to like claw it back.
No, these are just rounding errors, and it's
Right.
worth the
It
account.
literally is a rounding
Yeah,
error.
and it's worth it. And it doesn't even seem like there's anything there. But there are instances where, I we just read that Apple poached some team from some sort of reader in the iWatch, and as a patent owner,
Oh yeah, this was a big one.
I got my patents right here. Ha ha ha! I framed them because
Tombstones.
and I frame them because to me this is a big deal. I invented something, it's granted patent, and it does make people's lives better, easier, faster, stronger. But I always joke around. Patents are almost useless. They're
Almost.
only as powerful as you have the money defending them. I'll repeat that. Patents are only as strong as the money you have defending them in many cases. I've heard of some wild patent stories where it seems like patents are incredibly strong and useful, but I've also heard stories where you just fine tune one little thing, and my patents are all into the ether. Anybody could read my patents, and you could
Yep.
just go in, see how I manufacture, how detailed I get, and then just change one little detail. But this was an instance where I was mind boggled that it happened, and it also happened. And I was like, oh wow, Apple had to stop shipping or change some of the software and technology.
Yep.
But then I found out what company they copied, and it's also a behemoth, right? They got deep, deep, deep pockets, and you know
Yep.
what?
Very
Back to a
successful
rounding
expander.
error. It's worth fighting for it, and it worked.
Yes, and so it was on the Apple Watch. I believe it was like reading your oxygen levels
Yeah,
where they were infringing on the patent. And this fellow professional sold his last company for hundreds of millions of dollars, and that's what it takes to fight Apple. And the
yeah,
fact that Apple got a court order against them to stop the shipment of their watches
nuts.
was, it literally has never really happened before. But then, as of this week, as we talk about current events, Apple has now officially been sued by the government, by the Department of
Yeah,
Justice, as a monopolistic corporation that we will soon find out. I haven't read the cases. I've only read all the articles about it. It's a soft case. It's not really well thought out. Like, okay, these people are smart. They're not going to
yeah,
go against Apple, the biggest company in the world with $150 billion in cash, unless they
cash.
have some chance. And everyone's been suing Apple, right? Epic is going after them because of their marketplace. Netflix wants you to sign up all around online so they don't have to give you the 30%. Netflix isn't even on my Apple Vision Pro. They will not do business with them. Google wants a piece of it. So look, Apple is their privacy, their Chinese wall, and they've never been hacked. I trust them, but I have my iPhone. But around the world, it's Androids. Apple probably makes up what 20%, a small percent, but still, everyone's going after them. So stock tanked. That took out probably like a few $100 billion worth of
Yeah,
market cap, and this one person, as you were mentioning, with the watch, because they have a patent,
yeah.
stop them from shipping. So impressive.
And these 5% market cap movements, these are hundreds of billions.
Yeah,
Hundreds of billions of dollars, and it goes into liquidation. It's a fascinating phenomenon, these tiny percentages. And
yeah.
then just at dinner today, we were going over a venture capital firm got acquired or merged with a larger one. What was the deal with that?
So this is something that we've seen a lot more of recently, that basically you have an orphaned VC fund. If you raised a fund one, a fund two, you probably raise, I don't know, 5, 10, maybe 20, $30 million, and you have a portfolio and you want to take care of your companies. So if you can't raise another fund, that means you can't invest in new companies. It also means you don't have fees, so you can't pay yourself to be a full-time investor. You basically have a fund, and it's a 10-year vehicle, so you'll still be getting fees like maybe 1.5% a year. So on a fund, you'll still take out, you have to maintain it. There's legal fees just to keep it updated. You have to file your K1s every year. Like, it's still a lot of work to run a fund, mostly busy work. But if you are talented, you can't raise additional capital. Maybe you need more time to mature your investments. You
Yeah,
have no DPI. You didn't distribute money back to your LPs because it's not expected by maybe fund maybe three or four. like 5 to 10 years now. Another fund will just kind of absorb you. You'll give them a little piece of your equity in the
Mm.
companies. They'll basically employ you. We've never seen it over the last 10 years because either you kind of just gracefully moved on, or you didn't have any investments really that people wanted to acquire, or you weren't a good investor. So generally, it's a friendly handshake deal. It's almost like an acqui-hire. I
Yeah.
want your portfolio. Maybe you have some connections to capital. And if we merge our forces, then we can maybe even raise more capital together. So we've seen a few of them. It's happened in Europe. It's happened here in the US. Just join forces, acqui-hire. It's almost like a VC merger to some extent, depending on the size of them.
Yeah. Three trends that I've seen in the family office investing, angel, venture world from this founder's point of view, just trying to look in, is one, AI. It makes it seem like everybody's getting invested.
Yeah,
And, we, even from our perspective, the ones that we see, if you're asking us for money on an AI company, 95% of the time, it's not going to be able to compete with a company that's being funded by one of the mega
I
giants
got
that has
flack
the
for that on Twitter
infrastructure.
because that's what I said.
Yeah, it's a weird phenomenon. Two, I see alternative investments becoming more popular. So, you know what? Maybe startups isn't the greatest world, or let it pass by 3 or 4 years, even though we're still bullish on it. It's gotten more fine tuned where we're not even sure what the greatest deal is at the moment. It's kind of up in the air, and it's now full blown confidence in the founders.
Yep.
Who's the founding team? Product, God bless, good start. Who's the founding team? And then just from like and this is not financial advice, ETFs have changed the game, at least when I go to these family office events where everybody's trying to raise money and solicit for real estate deals. They're trying to raise money for a hedge fund, a private equity fund. But now I've seen these three categories are the topics of conversations when I'm running around in New York City trying to learn as much as humanly possible. From my startup point of view, I
Oh
am
yeah.
glad I'm not raising money. CPG now is a terribly hard business. We were just going through one of our investments, and fulfillment cost is 1/3 of their cost. That's pick, pack, warehouse, shipping. I couldn't, I mean, I go through that myself. We're always looking for the next warehouse. We're always looking to partner with one of these giant, purchasers of
Yeah.
UPS or FedEx. It's literally, a commodity when it comes to working. If I could save 7%, that's a world of difference to my bottom line.
Yeah, those margins, that will change everything.
It's
And so,
really tough out there. You're
yeah,
manufacturing, you're always trying to improve. Costs are moving, whether it's the container cost. The only thing that really stays still, at least today, is your tariff cost. If you're manufacturing
we'll see what
overseas.
happens after this presidential election. It's going to be up in the air.
Yeah, I remember
Trump or
my
Biden.
tariffs went up 15% just based off one tweet.
Yeah.
And what's unique about CPG companies and companies that manufacture, I believe there's a handful of. I mean, I know there's a handful of nations that are called most favored nations. And what does that literally mean? That means the U.S. has a trade agreement with them that we don't have to pay tariffs. But the other side of the equation is these countries know that they're
Yeah.
most favored nations. I manufacture in a company in another country that also is a most favored nation compared to my Chinese manufacturing. But they go, okay, we know your tariffs are this much to bring it in, so we'll, instead of 11%, we're about 9%. After the cost of tariffs, they all know it's
Yep.
really tough game.
It's their business too.
Yeah,
Uh, and so, to your first point on AI, it's all the funding. Great. We don't have to talk about that. But what I tweeted out was if you are pitching me something AI related, I have a few AI investments. I know some AI people, but like I don't know the schools. I don't know the PhDs and the people who run AI, all these mega companies. So yes, once I'm back in it, I will be on like a first, second name, like connection basis. But like you're pitching me a wrapper, that's fine. It's an AI wrapper. It's
yeah,
open. AI, it's Claude, it's Mistral, all of them. That's great. You can make millions of dollars doing this, but that is not a VC backable business.
Yeah.
We will see multi 10, $100 million businesses being run on AI, but maybe, and there's always going to be that outlier, one or two will get acquired for a few $100 million, but that is not the AI we're talking about. And I was just reading TechCrunch. They're like, hey, we're going to cover AI, but like, how do we actually cover it? Like, you have a CPG product. Okay, great. This is a new bed sheet. This is a new soda. This is a new like bicycle. Great. We can cover that. AI, even if it's open source, Twitter, Elon open source Grok. I haven't seen any articles break it down because how are you going to go through hundreds of thousands, millions of lines of code? You need AI to determine your AI. One of our investments, Hyperite, Matt, he goes through all of them. And so, like, he's my muse for how you test all these 7 billion token AIs because you have no idea. The biggest problem with them is we have to prompt them. And we're like,
Yeah.
hey, write me a blog post about how startup funding is great. That is the most basic thing and it's simple, but
Yeah.
like, this can read your code, this can write your code, this can move robots, this can pinpoint anything you want. We don't use it properly. So if you're pitching me something AI wrapper, the answer is 99% of the time no, which is already sadly what I say most of the time. And so other industries are difficult. We have investments across almost every industry, no fintech, biohealth, education, insurance, everything else. And what used to get you, as Max was saying, when funding was easy, ZERP, is you could paint a pig, put lipstick on it. Way too many people got funding, and that's fine. I actually think we found some diamonds because of it. A lot of people learned and lost, but not anymore. I have companies growing 1, 200, 300% year over year. And these aren't like going from like $100 to 300, 400, $500. This is going from like 1 million to like 4, 5 million. And still their valuations and interest are not there because they're not AI.
Yeah.
There's no IPOs, there's no exits, there's no M&A. So if there's no liquidity, I don't care how fast you're growing, no one can acquire you. And if you're not an IPOable company, there's no exit liquidity. It's a very interesting and odd time.
Yeah, I mean, I feel like a leading indicator is a lot of these accelerators are falling apart and incubators are falling apart. These were the creme la creme. This is where, within the past 15 years, you wanted to be part of one of these ecosystems. An accelerator is, there's a simple basic model, at least for 90% of them. They give you 125, 150,000. They take 6%
Yep.
of your business, but they give you a 90-day cohort where you come in, they, pound you. It's almost like going to, 90 days worth of schooling, how and why you build your startup. They, give you the fundamentals. They give you people to help you build your infrastructure, advisors, but they're falling apart now because they have the same business plan as venture capitalists,
Yep.
right? I really enjoy that, the business plan because you get to come in and be hands on. And sometimes, in retrospect, if I started my business very young, and maybe I should have stepped into one of those in my early days. Now I feel like I could be a mentor at one of these things, but they need their own mentoring. Are they in
Yeah.
a business that's going to be sustainable? TechCrunch is they're closing down
The
so
TechCrunch
many.
Plus.
Yeah,
Yeah.
they're
A
closing
subscription
down.
model.
Yeah, they're closing down. But it was not TechCrunch. It was the accelerators.
Techstars?
Techstars, there you go. They're closing down, all of their non-major hub accelerator programs. It became almost like TEDx, where it kind of diluted the brand because there was enough people that cared and wanted to watch and listen and wanted to participate. Now they're going back to the real TEDs, where's the main conferences, where are the main people, and how
Yeah.
can we survive?
It's like we're seeing with a lot of companies, right? Like Meta fired 23% of the company and revenue went up 25%. There was a lot of overhiring, a lot of zealous. Money was cheaper. Things were
Yeah,
going up and to the right and less kind of accountability. So now we're getting back to basics. A lot of people just overexpanded. When money now is more expensive, you have to kind of retreat. That's why everyone's saying, great, get to profitability, break even, like become a sustainable business. You can't rely on money. And so there's so many of them. So Techstars, great. They were one of the original ones. And this kind of coincides with like Foundry Group. So Foundry, is one of the largest like LPs in a multi-$100 million, definitely probably a billion under management. They invest in emerging managers. They were a huge backer of tech stars, and they just not called it quits, but they're retiring. They won the game, and the game is a little bit harder now. So I would say they're leaving on top. And so that leaves a lot of funds without funding. It
Hmm.
leaves a lot of companies because they also did directs without funding. And so we have tech stars. I think we of 60 investments, we have two out of tech stars. In New York, our best friends are Mirage ERA. There's 500 startups. There's countless ones. Every major city
Yeah.
has their own. And the number one always is Y Combinator. They just had the
Yeah.
Reddit IPO. Stripe is their darling. That's where Coinbase came from, Airbnb. And so you can name a dozen companies that actually got liquidity. And so they've received billions of dollars back. No question. They started it and they're the number one. Everyone's always been trying to go after them and say they're different. It doesn't matter. But even they retreated. They had usually, I don't know, a few dozen people, maybe 50 in their cohorts 4 times a year. They expanded. A few of their cohorts had hundreds of companies. We got brochures, and we would go through hundreds of companies on their website, reach out to them, the best ones, proverbially the hottest ones. We raised
Yeah.
funding prior to demo day, and they started at like a $20 million valuation. So like we're price sensitive, that kind of priced us out. Now that Gary is taking over, he's vocal, he's impressive, he's made some great investments. Rumor has it he's raising $2 billion to get back to basics, but do a continuity fund, which is we made some good investments, as you said, 125,000 to dozens, maybe
Hmm.
100 companies every year, and then we want to follow on, and that gets into portfolio construction and other issues, but they are still a venture fund at the end of the day, and they have LPs and they have to make money. And that money comes from exits, 99% acquisition, and used to be 1% IPOs, but now it's even less.
And IPOing is also just a weird phenomenon in its own. I know we spoke about in the last podcast that it is a venture capital raise. I mean, it's a public raise, but it's a next raise because you need funding, and there's
Yep.
no means of funding beyond the public markets. But we always joke around, okay, back to the original conversations of Facebook, Meta, Apple, they did 115 billion point four in 1 quarter.
1 quarter.
That's 1 quarter. That's like 90 days.
Yep.
Whoa.
Right.
You almost like have to laugh and like catch your breath because we live in the world of startups where you have to get smart fast and move quick. And we're just trying to make the extra million. We're just trying to make the extra 3 4 million. And we were saying just those points are astronomical
These are
numbers.
crazy big numbers. And so Reddit IPO'd last week, 800 million in revenue. The IPO was a down round. The last
Yep.
valuation was technically at a 10 billion. So they went out at 6.5. They were up, what was it, 30, 40%. So they ended around
First
9.5 billion. It's hyped. It's Reddit. Like, this is the hottest company. Alexis Ohanian, the founder, Steve Hoffman, all these other people. And then it kind of started going down. So it started, they raised at a $34, so they raised like $750 million, still losing $90 million a year. But to your point, $800 million, that's a ridiculous amount of money.
Yeah.
But someone obviously found the data. Facebook and Google make $800 million in like 4 days, and that's mostly profit. Also, like think of that, like
Mhm.
20% profit margins too. So like Reddit works a year to make $800 million at an 8 billion valuation. Facebook and Google Meta are worth what is it, almost $1 trillion, and they make $800 million in like a few days. It's
Yeah.
truly ridiculous scale. And these are the companies, as you were saying, are just getting bigger and bigger. They're sucking up the talent because they have to. The expectations are high. Every quarter, they need to grow 12, 15, 20%. How do you constantly do that? You invest in other companies, you hire more people, you build out new technology. And so these startups, we are always saying these are death by 1,000 cuts. These companies aren't going away. They'll be just fine. And right now, they have more than enough money. They have more money than all the VCs outside of like SoftBank,
Yeah.
uh, combined on their balance sheet. and they're just playing the long game. Startups, they play day to day. These companies, you say, right, play quarter to quarter, but they plan years out. When they're
Yeah.
investing hundreds of millions, billions of dollars, they're thinking for full year 25, 26, 27 of like 30. They project it out. It's truly amazing what goes on behind the scenes of these companies and what they're capable of doing.
And they're allowed to lose money. Not actually, but they could burn $1 billion, and
Right. They
it's
planned it.
almost like it's like a scratch. It's not a
Right.
big deal.
It's part of their
It's
budget.
it.
They knew they were going to lose $1 billion, and that's okay, but they know they're also going to make 10 billion. That's expected.
Yeah, and I like to remind people, how are they making this money? They're making this money from people like me because I still believe in their platform. Their platform helps me acquire customers. And
Yeah.
all I want to do, and the only reason I start a business, is to sell a product to a customer. Hopefully, they like it and come back. And realistically, I'm not making money on my first sale in many cases. I'm hoping that that person comes back for a second, third, fourth time where I actually
LTV.
yeah, lifetime value where I actually don't have to pay for the second, third, fourth acquisition. Hopefully they purchase more or have a higher margin.
Gotta get your
You know,
CAC down.
you got AOV, average order volume. And I like to remind people the more I ship out, yes, the shipping cost goes up, but per unit it goes down.
Yep.
So that's, when these companies are saying like 50, purchase over $50 free shipping or $99 free shipping, we're not giving you free shipping because we're going to lose money. We're giving you free shipping because if you order more of the product, I mean, it's a push and shove.
Yeah.
I don't want to pay your shipping, but it ends up I can make an extra 9%, and I'm moving inventory.
I'll move that
We're
on to
we're in the
you.
logistics business. We're just trying to keep moving this inventory, but we rely. Why? What is all that Reddit money? That's somebody like me taking an ad out on a Reddit thread of caregivers and potty training, and the data is incredibly important. It's not just a billboard where we think 600,000 people are driving by and most are this genre, this age. No, this is data to the point where we know who you are. Your keystrokes know more about you. And, just like what was that scheme? The Cambridge Analytica. Everybody was
Yeah.
freaking out that they know your age, your sex, your thoughts, everything about you. But if you spend enough on Facebook or
Yeah.
Meta, I have all that information just at my fingertips. I want to
Yes.
find somebody who's 26 years old, male, lives in a geo-targeted this far from a Walmart, and has this household income and has two children.
Yep.
This is the data that I acquire from them, and it makes me seem like I'm this evil genius. No, this is all at your fingertips. You
Yeah.
could do it out there. You just have to go test it out for yourself. Go
It's
boost one
kind of
of your
freaky once you
posts.
start playing with it. Yeah.
Yeah, go boost one of your posts to see what's capable at your fingertips.
Right. Who do you want to get in touch with? Let me just put this ad in front of some random person you'll never meet that hopefully will buy your product because you read some copy and that spoke to you in the ether that I clicked here, create an image, it pops up because it knows everything about you and it knows that I want to target you. So this is where it gets weird. Yep. And now that's why Google is getting rid of cookies. It's going to make it even harder. So now the bigger companies are going to get even stronger
More
on your
control.
apps. When you open your iPhone, remember how it says, do you want to be tracked? Do you want to allow you to track your data? That's how other apps learn from other apps because they're desperate and they need as much data as possible. They go out and they buy it. The dark web, fine, but these companies sell your data. Don't invest in a company that says your data is worth something because you individually are not. But when you
Yeah.
put together hundreds of millions, billions of these different posts and you give them the data, you are the CPG product in the container. These companies, Google, Facebook, are in the container business, as Max was saying. They're in the logistics business.
Yeah.
You fill them with data and they move it around. And then you pay them for all that data. It's truly mind boggling.
Yeah. And just one last thing is if you ever like gone to somebody's house or apartment and hopped on their Wi-Fi, you get targeted by things that they get targeted by.
Yep.
There's a lot of apps that we could find lookalikes of this data. So
Yeah.
they came to the conclusion, just a simple play. If this person's looking at this, so this, if somebody hops on this Wi-Fi, they probably have some similar interests or have spoke about it. It's a bizarre phenomenon. Data is king and queen. Data runs the world, and people are trying to figure out how to use it most. I always joke around. We all say, oh, privacy, oh, this, but we sign up for TSA pre, global entry, cleared. What is that? We're literally giving them biometrics data because I want to cut the line and go quicker.
Yeah.
So,
Happy
and we're
to.
paying to be part of Big Brother. Ironically, when you're not paying to be part of Big Brother, it's a problem. But when you're paying to be part of Big Brother, and I'm sure they're selling that data. I remember we were just talking about 23andMe, and that is like DNA,
Won't do it.
genome data, which is even more mind-boggling
They've been
than
hacked multiple
your
times,
keystrokes.
and they're about to go bankrupt. Someone's going to buy that for free.
Somebody's gonna buy their data for pennies on the dollar, and I don't know
Right.
what
It's
they're
probably
gonna
going to be
do
like
with it.
Facebook or Google is just going to, oh, okay, well, we have your digital data. Let's get your DNA.
The world's getting weird, and let's keep you updated on it. We'll do this
Yep.
weekly. We're gonna, we read the headlines and we read the fine print, and we're boots on the ground, and we're trying to make it. What's our slogan? We're trying to create an
We
understanding
create
for a complex world.
clarity for a complex world.
Yeah, and it's
Creating
getting weirder.
understanding for a complex world.
It's getting
That's what
weirder
we
and
need
weirder.
more of.
Yeah.
So with that, we'll be in touch, and we will
Yep.
continue doing what we do because we love it so much.
And we hope you love it. We hope you learn something. Let's do this. Let's do this together.
Yep.